big story about that in the current news is Marco Santarelli. He's been charged with bilking investors out of $62.5 million. He's known for Narada real estate investments or Narada capital management. Keep in mind, a lot of investors have approached me about him, and they're accusing him of running a Ponzi scheme, okay? These investors are thinking now that the government has charged him with this crime, okay, and he could get like 20 years in prison, right? The government could lose their case. Like, you have to understand that the government doesn't always win. Just because they charge somebody, everybody has the right to a trial, and they present evidence on both sides, and a jury can decide, or a judge can decide. Mostly it's a jury, though. The government could lose their case, and a guy like this who ripped people off, right, according to the government, allegedly, I should say, right, to the tune of almost $63 million, he could just walk scot-free, right? And guess what? He can probably use a lot of the money that the investors invested with him for his defense. I mean, who says he isn't using that money to hire forensic accountants to spin the case in his way? Who says that he isn't using that money for legal representation? I mean, folks, do not invest in syndications or funds to whatever extent possible. And the same with Wall Street, right? Unless you're sort of downshifting into neutral and you've made all your money, you're not going to get rich investing in somebody else's deal. You could get rich investing in your own deal. That's how people get rich. Invest in your own deal, not someone else's deal. Not some syndicator, not some fund manager. Just do your own thing. Be a direct investor, and for the bulk of your wealth, invested in your own stuff. That's the lesson here. Commandment number 3. So this is an Orange County Register article. It's one investor, quote, "I have lost a lot of sleep and cried a lot of tears," said one alleged victim of private equity CEO Marco Santarelli. And that's Narada Real Estate Investments, probably how you know him, but he had another company, Narada Capital Management. And then one of the reviews that came on, his podcast is still running. Okay, investors are still looking at investing with this guy, I guess. Here's a 1-star review. This is from Sullivan M., located here in the US. 1-star, criminally indicted. Beware, Marco has now been criminally indicted by feds for a $90 million Ponzi scheme. Now, I don't know where he gets his $90 million, and the Orange County Register article says $62.5 million. But either way, a lot of investors have lost a lot of money here. So commandment number 3, thou shalt maintain control. Be a direct investor. So here is an example of return on investment. So for those of you listening on audio only, I am showing a chart of the last 10 years, and this data is from the FRED website, okay? St. Louis Federal Reserve website, FRED, and it shows the S&P, which has had a phenomenal run, by the way. Stocks have been great. Gold has been great, and houses have been great. And here's what they say. They say the S&P has been the best thing going. Over the last 10 years, it returned 195%. 195%, so you've almost doubled your money. Gold, which has been doing great lately, gold has been a rather sleepy asset over the decades, right? It's sort of not done that much, right? But gold, doing well lately, 117%. And the worst of the bunch, they show you on this chart, but I'm going to prove them wrong in a minute. Hang on. But wait, there's more. The worst of the bunch is single-family homes, because the median home price over the last 10 years has only increased by a measly 93%. Okay? A measly 93%. Not as good, according to this chart, as gold or the S&P. But are they really telling you the full story? Remember, always ask yourself about the dogs that don't bark. Always ask yourself, whenever someone presents anything to you, they present a chart, an article, they just say something, they're on stage teaching you something and maybe misleading you. Always ask yourself the question, what are they not telling me? What is the article not telling me? What is the speaker not telling me? What is the chart not telling me? You can't hear the dogs that don't bark. And also always ask yourself, Compared to what? The Jason Hartman question, as you've labeled it, compared to what? Life's most important question. Those two things, the dogs that don't bark and compared to what, are really, really intellectually important concepts. So let's now look at this chart calculated correctly. I have corrected the chart. Again, it says the S&P was the winner at 195% return over the last 10 years, gold at 117%, median home price 93%. But most people use leverage when they buy the home. And if they just use very conservative leverage and they put 20% down, not 10% down, not 5% down, not a VA loan with nothing down, or an FHA loan with, 3.5% down, right? They basically put down 20%, a very, very conservative type of number here, right? That turns that 93% return into a 465% return, conservatively leveraged. And remember, that doesn't include positive cash flow if it's a rental property. It doesn't include tax benefits, doesn't include mortgage paydown, and you know what it doesn't include mostly? Inflation-induced debt destruction. Yeah, that's the secret wealth creator, trademarked by me, inflation-induced debt destruction, that I've been teaching for 21 years. It's not even shown here. All we're talking about is simple return on investment based on 20% down, very conservative, not over leveraged. If you put 10% down, this return would be it's already through the roof, but it'd be through the atmosphere, okay? And if you put 5% down, it would be insane. It would be, go to Neptune, okay? So again, the media will mislead you because the media is part of the vast Wall Street conspiracy. They want you to invest in stocks, assets that are the low-hanging fruit for the government to grab and tax and control and really see easily. And real estate is never really considered an investment like the Wall Street crowd is. It's just not fair how that's characterized. But again, it far outpaces the return of the S&P or gold or almost anything else pretty much, right? Now, you could have had a couple of years where you made more in Bitcoin, okay? But here's the problem. Here is the problem. You must read Morgan Housel's book, The Psychology of Money. It's a great book. And what he talks about in that book is how investors, and he's mostly a stock market guy, right? But what he talks about is how investors can never control their emotions during the down cycles. So they always sort of buy psychologically when things are peaking and they sell when things are down. And that's the problem. Real estate, though, because it's less liquid, it forces discipline upon you. It makes it a much better investment. It's harder to access the equity and spend it and blow it. And it's not very tradable. You can't trade it with a click of a mouse like you can a stock. And so it forces you to be a more prudent, long-term, Warren Buffett style value investor because it's not very liquid. And that is the benefit, not the drawback. It is the benefit of income property, the most historically proven asset class in the entire world for literally thousands of years. Okay? Nothing else is like it. Nothing else is like it. So I want to close today with this great quote that I read when I was 17 years old. And it's from William Shakespeare. It goes, "There is a tide in the affairs of men, which taken at the flood leads to fortune. Omitted, all the voyage of their life is bound in shallows and in miseries. On such a full sea are we now afloat, and we must take the current when it serves or lose our ventures." The opportunity is here. I'm not going to say it's the best time ever to invest in real estate. It's not, okay? You could have bought as much property as you could have at the beginning of COVID and sold at the sort of unofficial end of COVID, and you would have made an absolute fortune, right? You could have done that in 2008 and, sold around, I don't know, it depends, if you wanted to shorten the time, right? You could have sold in 13, for example, and made a ton of money. Okay? There are always cycles to everything. But folks, you can't win if you don't get in the game. And if you're in the game, consider expanding the game so you can win big. Anyway, reach out to us. Our investment counselors are here to help you. We have properties all over the country in a whole bunch of different markets. Empowered Investor is here to empower you with free investment counseling. 1-800-HARTMAN or 714-820-4200. Press extension 2 on either of those. You'll get one of our investment counselors, and they will help you do a portfolio makeover or a portfolio review and figure out the best way to maximize your return on money. We have great properties that we can help you buy through the providers that we've established and we've vetted, and we are constantly telling them to be conservative in their projections. You can find these properties at jasonhartman.com. Just click on the properties page and you can see the full performance there. By the way, we have been working on these performance. So if you've been investing with me for the last 21 years, for example, take a look right now at jasonhartman.com/properties, or just click on the properties button at jasonhartman.com and see the updates to our property software. You're going to love them. And soon we are going to institute those same updates into Property Tracker. That's the other software company that I own that basically helps you analyze real estate deals. You can go get a free account at propertytracker.com. All of the updates from the new Performa are not there yet. They're only on the shopping site at jasonhartman.com right now, but soon they'll all be on Property Tracker. We've got rent to value ratio. We've got a whole bunch of other great things we've modified. We've really kind of worked through this Performa and just made it more intuitive and easier to understand. One of the best things I ever did 21 years ago when I started being a nationwide investor is I standardized the data. And I've done that ever since with the same exact tool, Property Tracker, or these Performas, this one-page Performa. So you can easily analyze deals, you don't have to be a detective, and you're much less likely to miss things when you standardize your data. Very, very important.